All right. Good morning, good evening, good afternoon. So who's in here? What's up? You guys better have shorted yesterday. I don't want to hear that one person didn't. All of you. Even somebody in the Baby Pips thread, which I don't even post in there anymore very often, got the shorts yesterday.
Hey, Pete.
Oh, I just turned my speakers on. I did not expect anyone to be talking. Who's this? My speakers were off. Dave, you got the arrow. It didn't even tell me who was talking. But you know what? Let me get through my analysis and then we can chat. Now my speakers are on too. All right, let's get going. Boy, here the guy who go. Oh yes, yes. Welcome, welcome. All right, let's look at the news. Checking news. Checking news. I told you guys yesterday. Don't trust the early stuff. Wait for it. Wait for it. May 14th, Thursday. It's a light news day. There's no pound news at the usual time, but there is a speech in 3.5 hours for the pound. So that's what's high impact coming up. I'm not really worried about that. A little volatility. And in 1 hour, there is some light news for the euro. Not much. U.S. session, unemployment claims at the usual time, 8:30 New York. It's listed as medium impact for some reason, so I guess these are lagging or something. I mean, unemployment claims are up, right? Whatever. How bad? I don't know. That's the only question. Canada has some high impact news, 10:30 a.m. New York time. It's a speech. Okay. So the only two high impact news today are speech, that pound, and then the Canada. And we got the U.S. unemployment claims. Okay. Anything of interest tomorrow? U.S. news is big tomorrow. Tomorrow is all about the U.S. and some early German GDP. Okay. To the charts. So I was joking yesterday. I mean, I say this like almost every day anyway, but yesterday I really made a point of it that the later day setups, meaning once you get into U.S. session, that's where the setups are happening. It's the market's kind of been this way for a long time. It used to be, there's a reason why I'm up at 3 a.m. to be here now because there are early setups very often. But lately it's been less and less, and they're later into U.S. session. So yesterday during the session, we had just made a point about really, and looking to the left and seeing all the setups, during U.S. session, and beforehand just having price kind of hang out and get to the good spots by the time we get to U.S. So if you're looking to sell, it flops around a little bit, maybe some weakness, then it moves up, then it moves up, then it moves up, and then U.S. session you get your sell situation. And it's just been like clockwork, like lately with that stuff. People are still popping in. Hello, hello. So I'm going to go through my analysis and then You guys can always type in the chat if there's any questions. But for the regulars in here, you better have gotten these trades yesterday. I don't want to hear you were busy. You weren't sure. All right, so let's go through it. And maybe you're still in it. It's a big trade. So this was literally what we drew yesterday, right? So these guys set up the cleanest, the best. This didn't get here till very late after the move. That's like really getting late. And then now, so we'll take a look at perhaps what the demand situation is there. And then what do we have on EJ? That was also looking to sell, but it didn't get really to our area. But euro dollar and pound did exactly what we were looking for. Euro dollar, pound dollar. So how did we get here? Right, there was weakness. This is redistribution in a downtrend. Here's the downtrend. It's sort of. All right, there it is. So, I mean, in the bigger picture, it's kind of a range, but the ranges are really big and they behave like trends. But why are we ranging like this for so long? Oh, I'll tell you. Here's where your buyers are, and here's where your sellers are. They both show up every time. Therefore, we have a range. It's not a range because it's dead and going sideways. It's just because demand is active, supply is active. Sometimes you get hang around in the middle for a while, equilibrium areas, but no real issue with that. It's really been acting very trendy, even though it's really a range when you back out fake breakouts and stuff. But we've seen this before in the euro dollar. I think it was early last year, if I'm not mistaken. It was a range that just went forever. But within that range, it was early 2018. Man, am I behind? Hey, camera, somebody's sealing. All right, let's maybe do that later. Just everybody have your cameras and microphones muted. Cameras off, microphones muted. Thank you. Until at least after the analysis. All right. So good to have some extra people in here. I know some of you asked for help. Any questions you have? So I'll go through the analysis and hang out for a couple of hours. So that was another instance I was just thinking of price ranging for months, but really within that behaving like a trend. Anyway, so as we came down here and pulled back, there's our basically redistribution, which is the building up of short positions into the up moves here in our bearish environment. So that's very clear in the background, and you all probably know why I'm calling this weakness. Higher prices attracted the sellers, and the high volume up there shows us the activity. And of course, this is blatantly high activity. We're likely breaking to the downside, looking at all this weakness to the left, right? Meaning continuing this trend through here. This is really, really the projection. Unless we see some high volume demand at some point sooner, we're going to that support, right? Or at the very least here. But it's going to take some demand to stop this thing. So, and there's a lot of short positioning now, right? Throughout this week. So again, weakness, weakness, weakness in the background, fake break patterns, all the stuff that we always see, recognize. And the setup yesterday, again, this is stuff that we drew in during the session to map out what the areas that we were looking to get in. A lot of you know this stuff. This is a fib area, right? We're in a downtrend, weakness, fib zone. People are still coming in. Hey, welcome. All right. So going forward, let me turn my speakers down. Oh, so let's look at the setup really quickly too. So again, this is where we drew yesterday, our price area. Of course, it's the fake breakout. That's why. And I knew to draw it later because that's when the setups are happening. 16, just like we were saying yesterday. Really nailing that that's what's going on right now. It's not a coincidence. It's a intentional thing. that the London Open was here. We're looking to short. You got to wait for it. Whoever can sell the highest and buy the lowest is going to win, right? More coffee, yeah. We can talk about coffee instead of charts. You want to do that? I really like coffee. How about you? Coffee Lovers Lounge plus charts. All right. So we got the weakness in the area we were looking for this trade, right? We had a bearish environment. This was the ideal place to look for that. The sellers showed up, and it was a little volatile for a while, but we certainly were able to get out of that area where the high volume occurred and not see any issue with strength coming in. So certainly by this point, you'd want to be in, as the lower prices came in on low volume. Automatic support, failed to push through automatic support there. Volatility way too high. That becomes automatic support. I'm just running through this because most of you know this. And then as we push through this automatic support here, first level of support, or in this case, maybe second, but a support after weakness. Oh, somebody's mic is on. Let's make sure everybody's muted. Sounded like somebody's skydiving. Oh, I heard wind. All right, so then there's the push through the automatic support the way I like to see it, which is on decreased volume, closing at or near the low. And if you didn't get it there, then we got it here. And again, somebody's mic is on. I keep muting. Please don't unmute your mic, whoever's doing that. All right. So the lower volume here showing lack of demand. So we have supply, lack of demand. What's going to happen? Price goes down. All right. Now going forward, we're still bearish unless we see some high volume, right? As I said. Yeah. What's up? You guys have anything to say? You could type it in the chat. I'm just going to go through my analysis, see what we're looking for today, and then we can hang out and I can answer your questions. Make sure, especially people who are learning my method, make sure you know what you're doing. You should be doing well. You should be short yesterday, maybe still in it. So let's clean this up. Oh, it's like somebody opened the window. That's much better. So again, it's a range after a down move that's showing weakness, weakness, weakness. That's short positions with redistribution, short positions positioning for another leg down. And of course, the best place to buy is up around when these happen, particularly the fake breakouts, right? That's what I always say. And I'm not obsessed with fake breakouts. The market is. But a lot of people that were short prematurely had their stop loss here. You know what I mean? You understand what I'm saying? That's why we got to wait for it. So going forward, obviously weakness again, even more so. Big amount of short, large short, a lot of short positions from here right now. Smart money holding on to these shorts, euro in general. But looking to continue that today. And if you're not still in the trade, Dean, what's up? All right, I'll get to the chat in a second. Let's mark up areas to look for the short. Now, again, we have a bearish environment here, right? And let's just look at the timing of these moves, right? This is again, I keep saying this over and over again, but it's so important. I've been looking at charts for a long time, right? Over a decade. And there's a reason why I'm up at 3 a.m., which is London Open for me, because setups occur early just as much as they may occur later. And sometimes you have good setups in the first few hours, London Open. And by the time you get to New York session, US session, it's already played out. You're in target areas, and then the US news comes out. It gets sloppy, and you take it, right? That has been so to a minimum lately, where the setups are the majority, almost all of them lately, are at in the U.S. session, where the price areas that we're looking to get in, and we mark up at London Open. Many hours later, price gets there and sets up from that point, and it's completely forecasted to do that. Again, that was today, and you saw how I'd drawn that in. And the pound yesterday was yesterday. Day before yesterday was this we had drawn in, right? And again, look at the time, right? You're into US session 16:17 GMT, and it spent the whole Asia and Euro and pound first few hours just getting to the spot that we want. And that did set up on this day too, so maybe you took advantage of that. So I'm really emphasizing that right now because, like I say, the charts tell you a lot of information. It's just price and time and volume, but it tells you what people are talking about. It tells you what people are doing that have the big money. A smaller percentage of traders who really are doing things right and actually affect the market. And what are they saying? They're saying we're doing it in the U.S. session. We're doing it later in the session. And yesterday we were talking about theories why that is right now. But when I say talk about why, we don't really have to know why. But we can talk about it as long as we know. Okay. So going forward in this bearish environment, let's mark up areas for a potential short. Keeping in mind, almost all the setups lately have been in U.S. session and projecting that. For example, yesterday at London Open, we were here, and this looks like a really far away. I mean, looking back, it doesn't look maybe so much like it. But if you're here and you're coming down at London Open, which is this candle, and we're sitting here talking about selling up here, right? Before it's happened, it kind of seems like, well, can we even get there? That's kind of crazy. Yeah. So that's exactly what's been going on lately. Now, again, can we get up here today? Yeah, the way things have been behaving, we'll spend the next 6 hours to get there, or 8 hours. So, um, so we have our fib area. Again, our projection is to continue this trend since we have the markdown, the redistribution, and now continuing the trend, right? Now, if we're so lucky, we may not be able to just run off and do this right now and again get the up moves. But again, in this bearish environment where shorts are the way to go, and shorts are where the big money is, we spend the beginning of the sessions moving up, right? Why is that? Because they want to sell high and buy low, of course. Now, if you shift all these charts to the right, to the left, 5, 6, 7 hours to the left, that's what very often we're looking at. But things are sort of setting up for later. Okay, I know I'm dwelling on that point, but it's just so important right now. Most people maybe don't know this or haven't caught on. This is what's going on, until further notice. So we got a fib retracement there, which I'm always drawing in a clear situation where there's a move. In this case, bearish environments, we have that. And additionally, areas that of importance, simple technical analysis does reveal what they're doing at these price areas, right? All about price areas. So here, if we see weakness today, weakness, 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 and maybe here, then I'll be looking for, of course, the 5-minute confirmation for the entry there. Now, I always like to mark what's ideal. And yesterday, of course, it went to the ideal price, and that would be this. That's a bit much for today, but you never know. And if things kind of flop around and we get up there tomorrow, yep, that's right. So let's be thorough and say that is probably the best trade because it's this all over again, fake break. And then off this level, it's this again, right? So top, fake break, top, fake break, top, fake break. Okay. So doesn't mean it has to happen, but if it does, that's where we're looking for a setup, of course. Now there's a fib area there. I'm good with taking a setup there if I'm not still in this trade, by the way. So I'm good with looking for it at that point. We also have, again, this just a swing point, support, turn resistance going forward. And now if some of these areas that I'm marking are low and a little too aggressive and maybe get hit early in the session and obviously, whatever happens, but these are still areas, whether I'm looking to actually get in or not, the higher the better, let's put it that way. But down here, these higher prices that I'm highlighting are going to show sell activity. These are areas at which the selling gets revealed. How much selling, how aggressive they are, right? So, for example, if we get up to this point, we have a couple of little swing points in here, so I'll just kind of make it an area. Swing point here, support to resistance there. So generally here is if we move up, this will be the first spot. This will be a new high for the session so far today. 50 EMA, which acts as support resistance. There's yesterday. And then the support to resistance there. So the combination of those things, we get up there, we'll be able to see some sell activity. Now, so for example, that's information if you don't want to be selling this low and maybe early in the session, which I'd rather not be. Again, look to your left. But that's going to tell. So, for example, if selling does not show up here as far as weakness on a 5-minute chart, right? Small time frames, you're not seeing weakness. Okay, good. You're very likely to get your higher setups. There's other, circumstances where you may get a real big spike in volume of weakness through here, and followed by lack of demand, which does suggest you're just going to come down off of that. So that's why we highlight these areas, even if it's not an ideal setup or what we're looking for. We want to be aware that that's going to tell us about sellers, and an aggressive trade, could be taken there, depending on how clean it is and all that. But obviously, that's been the game here is, patience to sell high. And there's a lot of money already positioned short. We say where, I like to say, where is smart money positioned from? Of course, they're from this area. Which direction? Short. Are they looking to get out? Are they adding to those positions? What are they doing? Well, they're not looking to get out because we're not seeing demand come in. And all we see is them building up these positions. So they're still in, building up position mode, distribution, redistribution. By the way, welcome for the people who are joining today for a free session. And after I go through my analysis, we can have a chat. And again, the projection is really to start moving out of this area and really to continue down. This thing's going to go out with a bang. I'll tell you that. There's so many shorts in this situation that for me to, for the down move to be stopped, and for me to, on top of it, even more extreme, to consider buying, it has to go out with a bang, right? Likely a sharp down move with some very high volume, like a large candle kind of climactic stuff, right? This will go out with a bang into lower prices with high volume. That's the way they're going to get out, unless something very unconventional happens, like all of a sudden they're dumping their positions into here or something, which is really not the plan. They're holding on to these shorts for a reason. Cool. I see people typing in the chat. So once I get through my analysis, I'll go through that. All right. So again, yesterday, this was a 618 overshoot, 50 EMA, fib zone, but the 618, this is more, of course, still during the markdown, rather than, if you look at the pattern of the euro dollar there, we just talked about, it was redistribution during the downtrend and selling to those up moves in a particular price area on fake breakouts. In this case, and we have strong U.S. dollar, and that's what's driving this. In this case, we had that weakness to the left, and we already started marking down. Sorry, give me 1 second here. So this has that weakness back here. We started marking down, lower lows, lower highs. We're in a trend, and no issue with large demand coming in. We were talking about that yesterday. This is key to why we were looking to short here, right? Seeing that they're holding on to these short positions. They're not getting out. And that's very similar if you look at that right there, right, to this, where you have the weakness to the left in the fib area. That's what this has done for a little while now, a couple of times. Welcome, welcome, people who are joining. If you're learning my method, I hope you went short yesterday, U.S. session, euro dollar, pound dollar. And again, going forward, we're still bearish because lower price is getting accepted on low volume. Does that tell you demand is coming in? No, it doesn't. That's all you got to know. It's not a no supply. Don't hurt your brain. If anything, it's telling you lack of demand. Where's smart money positioned from? The weakness areas. Are they still in those positions? Well, there may have been some profit taking here. That was very aggressive selling. This high volume here is not off the low, right? This is high volume. What is this, Pete? I'll tell you. It's high volume leading to a lower close. It's just a lot of selling. That's all. It's not a trap move. It's not demand coming in. Just lots of selling. Lots of selling. And what happened at the low prices? It just sat there. Did they get out? No. Did we hit buyers? No. They're holding on to these positions. Short through there, short through here, some more aggressive selling. Weakness in the background. Hi, somebody's face. Make sure your camera and mic are off right now. That's kind of funny. So this guy, again, is in markdown where it's already moving down off of the weakness. We're in a downtrend, markdown, downtrend. And just looking to the left, we want to be aware of what's coming up. We do have a support there. So we're very likely getting there very soon, right? Why are they holding on to all these shorts? Well, there is a support coming up. And if you don't see large demand here, high volume stopping this move, yeah, we're likely going to break out. Again, it's going to go out with a bang. There's a lot of short positions. You want to align with smart money and get short when you see them getting short and building up those positions. So again, there was yesterday, there was there. Now here is a very common spot, of course, for these setups. We have a support resistance level here, which, like I just mentioned with the euro dollar, some of these lower areas are not wrong. They're more aggressive. The 5-minute would have to be very clean for me to do something this low. I'm also sticking to, I know I'm repeating it like a broken record, but I got to keep doing it. And people are joining. See, there's another person. Later in the day is when the setups are happening. Okay, I'll just scoot that on over. But these initial first areas, now this one's not too far from the fib, but just to make my point, selling here in a downtrend is not really my idea of a good time, right? We like these up moves. Selling higher is always better, put it that way. So selling in this area is not really the bread and butter stuff here. But as we come up, even the 14 EMA, which acts as support resistance and strong trends, but here we have a support resistance level. It's a bit low, but it's going to tell us about sellers. And if there's large amounts of selling here, we may just have to come down from there without demand as well. And if you don't see much selling, then you're very likely getting to this area, which is a better setup here through here up to the 618 overshoot, right? And if you don't see the selling here, then we'll go higher. Maybe we'll do a fake break or come off of this zone, right? Hunt some stops because they're all up here right now, a lot of them. And there are some in this area, of course. And that's a big part of what these fake breakouts are all about, right? Hunting stop losses. It's not evil. It's not a conspiracy. It's just a way to make the most money from your trading. Wouldn't you want to do that? Yes. Okay. And it's got to come from somewhere. Sorry. Sorry, losers. Again, where do you think people that were short through here had their stop loss? Right above the high, right? Not right above, all through there, apparently. And when those sellers sell off their short position, the smart guys say, sure, I'll take it. I'll take it. And that's a big reason why we get fake breaks constantly. And that's a big reason why the majority lose. The fake breaks hunt the stops in really obvious places. Let's say you're short through here, short through here, short through here. You just got kicked out. You just got kicked out before the down move, right? It's all over the place. You bought through here. Oh, you think you're smart? hit your stop loss before we go up, right? Okay. I think I drank my coffee too fast today. Wow. Talking fast. Where am I? All right, so pound dollar moves in weakness. Again, this correlation here where things are all bearish. Why? Because the U.S. dollar is bullish. It's not that the euro dollar, it's not that the euro, the pound, and the Australian dollar, so far as what we're looking at, are all just weak. They may be. And as we go through, we can see individually what's going on with that, the euro, the pound, and the Australian dollar. But what's driving the bearishness and what drives the market the majority of the time is the US dollar and the yen. And very often they're correlated. So the US dollar strength is what's pushing all these guys down. If we compare the US dollar to the yen, we can see the US dollar, the yen is actually stronger. And we'll get to that. And that may make shorting against the yen good today, and we'll get to those. But likely we're bearish all around because of the correlation of the dollar and the yen, which makes it a weird pair to trade. I don't really trade it, but it drives things. Certainly makes things easier. So again, here, bearish environment. Looking at a recent high volume, this is again the big sell-off. Now, yesterday we considered talking about buying here, and we didn't even get there until now. But this happened after we had projected this, which is what the high volume coming in, and we just looked at it on the pound, right? Just very high volume selling, high volume leading to lower prices, high volume leading to lower prices. It's just a lot of selling. It's not a trap. It's not strength. It's not confirmed as strength. And we were quite bullish for a little while on this thing, right? If you look to the left, we had our uptrend. We didn't have a lot of supply coming in. Bit of demand here, a little fake breakout demand here. And that's why I was saying yesterday, possibly buying from this area again, where we saw demand and maybe a fake break here, which just occurred there. But we can't ignore the high volume that occurred since that projection, which is showing very aggressive, very high volume selling, bringing this really in alignment with the first two that we just looked at, right? Volume leads the way. And, we're done. One time frame right now to be able to see this. 5 minutes is not going to tell me anything new. It's high volume leading to lower closes, right? That's all we need to know. I'm sure there's little pops of demand through there, and they got run over, right? And we settled down here without buyers in very large amounts at all. So we do have a lot of short positions from this area now, right? Where are they positioned from? What direction? So, and again, we were talking about potentially buying here, but volume this high is going to change your background. It's going to change your direction once you define what it is, right? So this is all in line with the first two so far as being bearish. So let's mark it up. What's up, guys who are visiting today? We are going through the initial analysis, and then I can answer some questions. What else do I want to mark up? Well, so we have this general area. It's a swing point here. So we have this starting from this area and up through here. That's going to give us a potential setup. Of course, our 5 minutes shows us the entry, if that confirms. And like I was saying with the first two, if you mark up something lower, it's not just, simply because I'm looking to get in this low. I'm certainly not. That's not ideal, like I said. But it does tell us information. And for example, here, just a fib from this high to low gives us some information about sellers here. This is 40 minutes into the Euro session. We actually entered this area that's going to tell us about sellers, and you see what happened. The squash and the volume. This was the highest volume since that. Showed up right there. So it is confirming again, right? The 5 minute just kind of helps you see and confirm what's going on. If selling did not show up here, there would be a much greater chance of moving higher, of course, right? Now, this is, of course, the London Open spike. So volume's always high this time of day. Let's just get past that, which we now are, and we can start to trust things again. And if we pop up through here, maybe there'll be a fake breakout in weakness and come down, or maybe we'll continue to see weakness but move up. And if you move up and see weakness, weakness, weakness on the way up, and then you get to a higher area later in the day and it sets up, you're going to fall right through that area very quickly, right? Will there be any crypto? Yes, we'll look at cryptos. Absolutely. Yes, yes, yes. Hmm. Yeah, any questions you guys have, anything you could type in the chat now and then get through the analysis. I'll go through everything. So there's our three. So out of that so far, yesterday was the really good euro dollar and pound dollar shorts. Now the Australian dollar is lining up with this bearish environment. We'll see what happens with that. If you're trading my method, hopefully you took advantage of euro dollar, pound dollar short yesterday. Others might have set up, but those are probably the cleanest. That's what I was looking for. Again, the Australian dollar, this is very similar to what we just looked at, AU, AJ, because the Australian dollar itself was a little stronger, right? We have an uptrend to the left. We have some demand coming in, not too much weakness. That was then, this is now, right? High volume leading to higher prices, to high volume leading to lower prices. So again, what happened at this point yesterday? An up move on the US dollar and the yen. That's why everything moved down. It's not because individually they all suddenly decided individually to go bearish. That's what's driving things, right? So bullish US dollar, bullish yen. Everything against them moved down. And this was one of the big moves yesterday to do that at this time, which is not surprising. So that's in alignment. Again, high volume leading to lower closes, and then no issue with demand coming in at lower prices here, here. And sometimes, even though it's early in the day, you'll get a big pop. Not much there. So let's reset this. So we're all bearish right now. Mark up our levels, and again, it feels like 90% of the time, if you're whatever you're looking for, in this case bearish, looking to sell, you're going to be able to move up and see that later. Now again, just look to the left. 15, right? Looking at the time of the down moves. This big activity, 16, right? And so, moving my thing out of the way here. 15, 16 is here, right? So just to be aware of really, really the blatant, obvious pattern. It's become more and more like this over time. And now it's so extreme that we're just getting these setups in US session at this point for now. So there's that. What else did we do here? Support to resistance. Yeah. I mean, we're generally in this area or just before it, whatever. Resistance there. So to keep things pretty textbook, I'd like to see at least the fib retracements today. Again, if you kind of just look back yesterday, there it was. And now we have really, really weakness confirmed, making that even better. All right. The theme here is look to sell the up moves, right? Where smart money positioned from higher prices to the left over the last few days, or especially yesterday, Australian dollar, but for many days, euro dollar. Which direction? They're short. Are they getting out? No, they are not. And the up moves, we're likely to see them continue short. And of course, you want to align with them. That's why we don't chase the price. If you get in when they're getting in, they kind of got your back, don't they? Technically. Put that there. Okay, I see lots of stuff in the chat, so I will happily get to that. Feel free to type at any point your questions. And once we get through the analysis, we'll go over that. So, EJ, again, fake break pattern, weakness. That was a setup. Yesterday, I didn't take on this, but they're all doing the same thing because the US dollar and the yen are strong, making everything weak. High volume leading to lower prices. Demand coming in? No. Result? Clear. Kind of curious where this is. Now, this is an important area. This is going to tell us about demand. Very, very, very important area to show us buy activity. And what do we see? Not much. We even were able to get down to the 618. Not much. Nothing special. This is kind of average for the time of day. And to be in such a key area that tells us about demand and to not see it, and we can check the 5-minute, there's probably a little bit of spiking here and there as we enter the zone. Enter the zone, sounds like an 80s movie. And there's some demand to stop it there. That's Euro open. But this is all really flat. Really nothing special as far as volume, obviously, in here. Here's our aggressive selling to the left. So the projection is to break that 618. It's already been revealed. You know, mentioned this yesterday. Selling in an area like this, or at least having any confidence, let's say if we move up and sell into this, you say, well, I don't want to sell into an area that possibly could bring demand, right? But we've already seen the prices. It's especially good because this is, if buying was active, we would see the increase in this area. So it reveals that they're not very active and they're expecting lower prices through that, right? These, again, there's so much weakness in the background. There's so many shorts at this point that it's not changing direction until we see high volume demand come in. It's going to go out with a bang. We'll know when they get out, right? It's going to take a lot to convince me to buy. It's probably not going to be this week. Pretty much guaranteed. Almost. Maybe we drop today and see the climactic volume, right? But so otherwise we are short, biased, and it's nice to see this area not attracting a lot of buyers. We're keeping it nice and extremely bearish right now with that. You know, we could have seen a bit of demand. So, all right, well, we got to bring it up, but nice and bearish. There's that. There's that. What else? So the fibs, like I say, I like to do on an entire move or just a really obvious spot after you're going sideways, and that's the entire move after a sort of a range, but off of this too. So those two I would consider valid there. Areas to look for the short. Now it's already off of here, which did set up for a trade, gone right into markdown, right? We didn't continue to sit in distribution here. So we're into markdown. You know, I don't expect to be up here looking to sell again. We're off to the races. So we have our areas there. Again, some of these lower areas are good to mark just to give you some information. It's close to fib. There's a lot of correlation right now. Everything is bearish and similar, right? Which means when things set up, right, since we have so much similarity and bearish environment here, everything's weak against the dollar in the end, that if we're able to move up and see the setup today, pretty likely, that when it happens, it's going to be a correlated situation. It doesn't mean that every pair is going to confirm a setup, but generally they should be moving up. Generally, they should be hitting weakness together. A lot of times we see testing together, if we're talking about moving up, seeing weakness, and then testing for demand. That will happen as a correlated event throughout the pairs. And again, that's because the US dollar and the yen are in charge driving these things. It's not every chart is a different story. Not at all. If there's a different story, it would mean that something big is going on with the Australian dollar or the euro or something separate that would have to make that, so different. Okay. And again, just to kind of mark these areas. We've had some big swings, so, a lot of times you draw this in, you go, probably not getting there today. Yeah, we might. That's the way it's been going, right? If you start off the session here on this day, talking about this short, seemed unlikely, right? but we marked it and it happened. And that's a fake breakout of a previous high back there, right? Or whatever it was, or at least this high. So, yeah, that high. To finish off, now these are the main 6 pairs I trade occasionally. I actually took a dollar CAD 2 days ago. If there's something very clean on some of these other pairs, I will take a look. Some of them I absolutely do not trade, like the Euro Pound, uh, EA. I mean, if anything is textbook, but Euro Pound is some very small moves. These are really here just to see what's going on without the US dollar and yen influence. And if it seems like I'm obsessed with this US dollar yen influence, it ain't me. This is what drives the market probably 75% of the time, right? This is why there's correlation. Why is there correlation? Because the US dollar and the yen are very similar, most often strong or weak together similarly, and everything moving relative to that. So they're similarly strong right now. That's why everything's moving down. That is the cause of what's going on right now. Understand? So we don't have to jump over to NU and go, well, this is a new chart. What are we looking at? We know exactly what we're looking at. Unless the New Zealand dollar is going to be ridiculously strong, it's bearish against the US dollar. Right? Same thing. So anywhere you go, this is the story right now. This is what's going on in the market. Be aware of it. And they're holding on to these positions. They built them up even more yesterday, and it's going to go out with a bang. Maybe tomorrow, Friday, maybe today. We'll know it when we see it because it's going to be a lot of activity getting out of these shorts. So some areas here to look at, consider. This kind of brings a nice little potential fake break of that level. Again, I'm not obsessed with fake breakouts. Market is. If you're short through here, where's your stop loss? Right above that. And this is an area where it's just a simple fib retracement, which if you look at this move, is that sort of thing here. So selling in this pattern here is like selling here today. So we're looking at that. Okay. I don't know how I ended up on New Zealand dollar. To prove my point, that it's all the same. So don't say, hey, Pete, what's going on with dollar Swiss? I'll tell you what's going on with dollar Swiss. I didn't even change. I didn't even click on it. It's bullish. Oh, there you go. Right? Because the US dollar is strong and it's driving the market. Oh, yeah. Dollar CAD? Bullish. Oh, yeah. And there was a setup in here. Yesterday, I don't know about because I ended up taking the euro and the pound, but again, they all move together, right? Why am I going to take four trades that are all based on the same cause, right? The US dollar. All right. Are we feeling focused here and a little enlightened as to what's going on in the market? There's no mystery. Smart money is short, and they've been using the U.S. session for many days on many pairs to continue to build up those short positions. They're going to be in them and looking for lower prices for their profit until we see some very large demand, which shows us them getting out. And again, the Australian dollar was bullish for a while, and that's now come along with everything else. Okay. So again, and people that are here, subscribers that are here every session, know that we mark these things up early, and yes, 15, 16, 17 GMT, we get the setup just in the area that we mark, right? And that tells you you know what you're doing and you know what they're doing. It's not a coincidence. So to see that practically day in day out, that uh, certainly every week that happens, where we mark up these areas hours and hours in advance, and we get there and we see the setup later after the session. So I have been trying to focus a little more lately on making sure people understand the entries on the 5-minute chart because, again, they're later in the day, so we're not in the session while they're happening. And I was going through that yesterday. Okay, that's where we are. Put on some music, roll a doobie. Oh, I got to answer questions. That's right. So what's up to the people who joined for a free session today? Welcome, welcome. And I'm looking at your questions now. But even the way things have been so extreme, where the setups are really dependably happening, dependably later in the day U.S. session, I still want to be on. I'm used to it by now. I'm up at 3 a.m. and marking these things up and being patient and seeing what goes on between now and then. And you never know, something could set up early, but it hasn't been that way lately. It'll come back. Very welcome, Marcus. All right, I got to scroll all the way up now. Let's see where we are. I think I need a coffee refill. If you're a coffee drinker, cheers, refill. Maybe you like tea. All right. So now I got plenty of time to chill out. Not looking to sell down here. Let's go through the chat. All right. I'm scrolling up. I'm scrolling up. There's a lot to go through. God, I think I overdid it. All right, let's knock it out. Hello, sir. This is Mr. T. Mr. T. Wow, it's been years. I remember Mr. T. Is it really the actual Mr. T? No, it's not. Welcome back. How have you been doing? Good. Mr. Dean. Been a long time. Hope you're doing good. DK. Hey, Pete. Been a while. Months, maybe years. Thank you for hosting your webinar. Excited to see what elements I was able to take from your webinar. I'm sure a lot more than I wear. Also, oh, somebody typed and the whole thing skipped. It's okay. Also, hearing your voice and no supply, no demand. Very nostalgic. Like playing an old video game. Candy bars. There's all kinds of bars in VSA. It's very important to memorize. I think it's 898 signs of weakness and 1,247 signs of strength, and you have to memorize them. Or you get to say, sorry, Eric. Eric's in here again. Candy bars, gay bars, handlebars. Is this a handlebar? It's an upthrust or a climactic action leading to, there's a reverse upthrust leading to climactic action, which is not always legal. Depends where you live. So reverse upthrust. You talked euro, you talked pound. Let's talk euro pound. Adam, how are you? If you can, please. Well, like I said, that's not a pair. Oh, I'll look at it. That's not a pair that I trade. The way the euro and pound move against each other is not something that interests me very much. But the reason why it's here, and I do look at it, and there is information to get, which is what's going on between them without the US dollar and yen influence. Right? And by looking at this, we're seeing, okay, the euro has been stronger than the pound. Now, if we're looking to short, perhaps a pound is a better short, right? That's the weaker one. And that's mainly how I use that information. Now, there was some weakness yesterday on this fake break. This happened generally euro dollar, euro yen. So this was not only US dollar yen driven, but also euro itself. It didn't change the direction. It wasn't against the direction or anything, but you do see this probably across all the euro pairs yesterday at this time, right? So, and that didn't play out too well. So, because the US dollar strength and the yen strength is not involved, so it kind of made for a bad short, right? There. That proves my point right there. That exactly is my point. This looks similar. Here you also had high volume here, but these played out. Why did these play out? Euro, euro, euro dollar, euro yen. And this, what happened to that, right? Why didn't it play out? US dollar and yen aren't involved. So that's why I don't trade the euro pound. Get it? Between each other, I don't feel like it's not the point of the market. It's a side note. That's not where all the money is. It's kind of going to do a little of this and a little of that based on what's going on with the euro versus the pound. But the story of the market and where the money is not looking to profit off euro versus pound moves. That's not, you know, that's probably 4% of the money in the forex market is from traders. It's not much. It's dollar and yen driven, right? Okay. So that's a good example of weakness that just didn't play out, and the euro versus the dollar in the end did play out. That's a perfect example. But in this case, I mean, I don't know, unless you have a specific question, that's my answer. Um, the only reason to look at that and the dollar yen, which maybe I'll take 1 or 2 trades a year on or something, but again, I don't really trade that. Um, it's just for information. And if let's say we pop up here and we continue to see weakness in this area, right? It doesn't mean I'm going short. It tells me that the euro is set to be weaker than the pound, right? Again, today we could confirm more weakness. And going forward, the euro is set to be weaker than the pound. Therefore, if I'm shorting, I probably want to short the euro rather than the pound. Doesn't mean I have to listen to it. And whatever setup looks better and things change. And in the end, this isn't driving the market. So how trustworthy is this weakness? Well, the euro is supposed to be, well, no, we went up actually. With the euro supposed to be weaker than the pound, we just went back up. So it's kind of useless for the most part. Okay. It does strike me as strange when I explain that the U.S. dollar and the yen drive the market. This is where the clean moves are, and then people ask me about these odd matchups. It's, I mean, it's just not what's going on in the market. It's an afterthought. It's a side note. They get dragged along. It's not where the big money is. You're not going to have smart money on your side. It's not what's driving. It's not the story here. It's a cameo. It's a little character that pops up for a second. It's not the storyline. I mean, I do what I do for a reason. Let me just put this out there. Whatever I do and not do, it's all for a reason. So if people are learning my method and adding things, trading pairs I don't trade, using indicators I don't use, including fundamentals, wrong time of day, Asia, on and on and on, all the stuff that you may be doing that I'm not doing, that's probably why it's not working. I'll put it like that, unless you're doing it wrong. All right. Let's see. Cryptos, yeah, we'll get to that. Why do you prefer the 5-minute over 15-minute for entries? Okay. Time frames are an invention made by some person a long time ago that obviously caught on. Time frames are completely irrelevant and useless. Don't focus on time frames. Why the 5-minute? Because I need to see detail. I could use the 1 minute. 15-minute, it's 15 minutes of action in one candle. Not enough detail. 5-minute, check it on the 1 minute. I need to know what's going on. That's all. Now, if I had to trade off a 5-minute chart and I couldn't get anything else, I get my detail and I'll zoom the heck out and get my overview, right? It's just price movement over time. Time frames don't mean anything unless you're using an indicator or some silly method that once you go through time frames keeps giving you different signals. Then you know you're dealing with garbage. It's just price moving. over time. How do you want to look at it? You want to look at it like this? 5-minute chart, 1-minute chart, 5-minute chart. I'll zoom the heck out of my 5-minute chart. Guess what? It's my 1-hour chart. There's my weakness. There's my background. It's a 5-minute chart. I could use that. Time frames are irrelevant. It's all about price areas and what happened there. So I need some detail. Now, why the 1-hour chart? Because I can summarize the amount of activity in an hour. I still need to know what went on in there. I get down to the 5-minute or 1-minute or whatever. I still need to see an hour's worth of activity. It can't be summed up with an open and a close and a spread and volume. I need to know where that volume took place and what really went on in there, right? Because that looks like weakness because it's off a high price with a bearish reaction. But what if I go in there and see there's actually large demand here and not much activity there, right? Now, if I do it in a 5-minute, I'll get that detail. I don't even need the 1 hour, right? So forget time frames. Time frames, time frames. Sorry, I'm a little harsh today, but I don't know. Every day I'm in a different mood. I'm weird like that. The time frame obsession is very strange. And I think it comes from really, really bad information, bad education. When you say, yeah, this indicator works on this time frame, but not on the others. Why? It's the same price movement. You're just organizing it differently. Why would one thing be bullish and one thing be bearish? It makes no sense. Well, 1 hour says bullish, but the 15 minutes says bearish. So let's pick a time frame. Oh my gosh, what a horrible, ridiculous way to trade. Sorry, I'm a little harsh today, but you know I mean well. Let's continue. More coffee? All right, we did the time frame thing. We did what drives the market. It's the euro and the yen. Don't trade the weird versus weirder. Okay. Cryptos we'll get to. Okay, 5-minute over 15-minute. Okay, answered that. And as far as entries, the 5-minute is just really good for confirming things. The 1-minute is almost too much detail where you can get caught up in what happened during 1 minute. It's almost too much, but it's all about the price areas. And if I want to make sure there's weakness here, I can go to the 1-minute and see that the volume increased on that rejection in that price area. Doesn't matter what time frame really, but that gives me a close look. Matt, how are you? Would smart money consider selling off of the 14 EMA in a more aggressive markdown? Okay, the 14 EMA is an interesting thing. Very often, oh, not very often, but yes, that can happen. So you're in a downtrend, you pull back to the 14 EMA, which is not a far pullback at all. That's going to be before your fib and stuff, right? And you see a pop of weakness and you continue down. That's just a very strong trend. Strong trends tend to bounce off the 14 EMA, which is why it's part of the scalp entry in the right environment. So that does happen. Chad wants a hoodie with price areas, not time frames on it. Yes. Okay. Price areas, not time frames. Every time I click on the 1-minute chart, I say that as a habit. I rub it in. Don't forget. Scrolling back up here. Okay. So Matt, yeah, that does happen, but that's not the usual. The usual is, see, again, to explain the 14 EMA, it's not much of a pullback. So it's only in very strong trends that you get those 14 EMA rejections, but it does happen. But when we're talking about trading the regular method here, not a scalp or whatever, looking for that, nail the bullseye and get a big move, one shot kind of trade. The 14 EMA is not much of a retracement, and you're not going to get really a proper reaccumulation redistribution that soon into the retracement, right? The 50 fib really marks that, typical stuff where you see them positioning for the next move. 14 EMA is more, again, let's say you're bearish and you hit the 14 EMA, and there's just such little buying in this downtrend. It's so strong that you can't get through the 14 EMA. Because that's where the buyers stop and test for sellers, and it just could go completely dry and quiet, and the downtrend continues. Right? Okay. Dean, get your fresh coffee. Very good. Coffee Lovers Lounge, plus the occasional analysis. It's the other way around, I know. So again, the attendance number keeps growing. So hello, welcome. If you're learning my method, you should have went short yesterday, or else I'm going to be mad at you. Euro dollar, pound dollar. Everything's bearish. We're looking for up moves to short, as you can see, and typically, and even more so lately, it's happening into U.S. session. So we have plenty of time to see. We never did the pound yen analysis, but yeah, it's the same. We have plenty of time to see this happen. I wouldn't want to get short at these levels anyway. And of course, the only way I would buy is if we move down and saw some climactic demand. And it will go out with a bang. Maybe tomorrow, maybe today, maybe Tuesday. But there's a lot of money short. And when they get out, we'll see them. Lots of volume, lower prices to stop the move, right? Some things never change. What else we got? Okay, question here. Might it be that demand is holding off for a few vol bars? What tells you definitively that demand hasn't shown? The amount of activity. The amount of activity. There's so much shorting in the market on high volume weakness to the left. And if it's not there, then it caught up yesterday, AUAJ. But euro dollar, pound dollar, EJ. There's so much positioning short to the left that for the majority, for a good amount of those short positions to cover, to get out of the market, that's going to come in as demand on high volume. So it's factual information that the majority of those shorts are still being held onto. If they get out, it's going to create too much activity. Now, it doesn't mean 18% of those shorts have been closed. Okay, that's fine. We still stay bearish though. But when the majority, when the consensus is getting out, the volume will be there at low prices to show us. Of course, they're selling high and buying low, so we'll see it at low prices, unless some wacky stuff goes on. But 99% of the time. So that should answer your question there. And when you say that they might be holding off, again, it's mostly about price areas rather than the time. So if we were seeing even pre-Euro Open, just during Asia, some lower prices that are hitting demand on a 5-minute chart, popping up demand in a price area. We're starting to see that. We would consider that information. Maybe they are starting to get out, right? All about price areas, not time. So it's not really a matter of waiting. Sometimes you're waiting for something and price pops to it very quickly and you go, okay, then we're doing this now. We get to find out. It's all about the price areas. Marcus, could you have a look at AN? You want to reconsider that question based on recent developments, or you want me to still look at it? The whole what's driving the market thing. Why AN? Why? Do people think okay, you guys who are looking for help, are you under the impression that the more you look at, the more opportunities you're going to get? Because that's not what's going on. The movement of, again, sorry, I'm being harsh today, but I mean well. The movement of the Australian dollar versus New Zealand dollar is of no interest to me whatsoever. There's a very small amount of money involved. It's an afterthought. You know what it is? It's C3PO. He's not there for really any important reason. He's just there. He's the tag along. Well, he must be going to Tatooine for well, not really. He's just there because he's there. All right, that's a weird example. In the last movie, they made it more important. It's a tag along situation. It's not where the money is. There's not a big amount of money that has your back if you're doing that. Yes, there's supply demand fluctuations that are going to be happening and predictable, but okay. You're short. Oh, fine. Let's look at the chart. Just for you, Marcus. You trade Asia session. Okay, that's... Now, are you doing well, Marcus? You're trading pairs I don't trade at the time of day I don't trade. Are you profitable? Maybe you should start your own webinar on how to trade odd pairs at odd times of day sometimes. So that's a no. Let's see. Let me go back. So what was it? AN or NA? I don't even know what they do. What do they do on those? That's how often I look at it. Um, AN, right. AN. Now, like I said, the only reason I would even think of looking at this is because maybe Australian dollar has a setup potentially, and the New Zealand dollar has a percentage, and it's dollar and yen driven, but those two look the best. So I have to go to AN to find out which one might be better. That's the only scenario I can think of to ever open this chart. But let's do it. I guess. See, look, I don't even know how to open charts. I guess the scenario of somebody asking a question would also be a reason to open the chart. So you're short on this thing. Oh my God. I have nothing to say about this except I would not do that. I would not do that. I feel like nobody has your back in this situation. It's you're gonna hope that the wind blows west today. Uh, it, nope. The only way I would get short here is if I saw a proper volume in this area in the high prices. This actually moved down to show and confirm strength. So if I was asked, Pete, what do you think of this? I would be saying you might get some sort of situation or whatever the heck that's far away. Fake breakout. I would not be surprised if that happens because this is aggressive buying. High volume leading to higher closes. And you know what? This candle is big. And look at the low volume. That tells you such lack of supply. Why is this candle big with a low volume? Because it didn't take that much buying to bring it up. Why didn't it take that much buying? Because the scarcity of the selling. And then look at this, into higher prices. The supply is very scarce right now. So a limited amount of buying was able to bring it up because the trade has to be made, right? If you're buying, you have to find a seller. So a handful of buyers come in and it's barren. There's no selling and it has to move up to find those sellers. That's how bullish this is. If I was, forced to look at this and look for a trade, I would start to consider here another test with strength, fake breakout, 50 EMA, and I would be looking for that to get into a trade. Nothing about this says weakness. Then the high volume comes here to stop the down move with a bullish reaction. That's buying. Okay. Again, sorry if I'm coming off harsh today. Tough love, that's all. Yeah, that's what they call it. What else we got? We're just banging them out now. Don't ask me about time frames. Um, what else we got? What's up with the regulars in here? Yeah, it's something entertaining today instead of marking up the chart and then sitting here. Um, sorry, I have to figure out where I left off here. Okay, there's our AN. There's our. Oh, okay. So when you guys type, it jumps, which is fine. You can type, but give me 1 second. Okay. So there was the AN. And then going forward, to further elaborate my question, I don't know if you still want me to answer this. This was now 30 minutes ago. Hey, it's 4:20. You know what that means? It's pound news in 10 minutes normally, but not today, unless Amar has something in mind. To further elaborate on my question, the GU is moving down aggressively off the 14 EMA 1 hour chart. I reckon this is me just being impatient. And yes, yes, yes. Fear of missing out. Yes, yes, yes. The chart is the master. You are the slave. If you listen to the chart, you will be rewarded. If you don't, you will be punished. Okay, good. You know why I trust my setups? Hey, Pete, how are you so patient? Because I don't want to lose money and I don't trust anything else. You kidding me? I don't want to lose money. How are you so patient? Because I'll probably lose if I do that. All right. DB, new noob question. Can you please explain AR? Automatic rally, automatic support. Now, if you Google Wyckoff automatic rally, automatic support, or just automatic rally, uh, now I hesitate to tell people to go somewhere else because you can get misinformation. But here's how I define it in my own words. If we're talking about automatic rally, it's the first level of resistance after strength. So you get your sign of strength, right? You get a big candle moving down, you get the high volume, you get the next candle closing bullish, right? And as it moves up, it stops somewhere. On the 5-minute is typically the 14 EMA. 420 time for doobie bros. All right, I think we have a consensus in that situation where we need to roll the doobies. And we don't call it doobies, but in here we do. Okay, the Doobie Brothers. Oh, that's why they were called that. Where was I? I was going to say something, but I'm not going to say. Let's see. I'm scrolling back up. Okay, don't type for 1 second. Because then the chat jumps. There, demand. Okay. Oh yeah, so automatic rally. Now, did I really explain it? I told you the definition. I'll give you an example. Right now, we'll just use that. What's the first level of resistance after strength? We'll just use this as an example because we got some strength. And of course, in reverse, it works off weakness, and that's the automatic support. So automatic rally, I usually mark it with this, not to confuse it with my other lines. So here's strength, right? We move up. Now, for a moment, it looked like it could have been this. And if it does do that, then okay, I'll mark the first one. Okay, in real time, right? We're moving up, and then we start to move down. Okay, there's our automatic rally, right? Now, if you fail to break it, I update it. So now it becomes that at this point in time because we failed and came down. It's not a real breakout. So now this is our automatic rally. So now it's testing it here. And now is it going to be a successful push through it or is it going to fail, right? And the reason why you get automatic rally, the reason why you get, and very often it aligns with a 14 EMA. Let's just look at yesterday, which is automatic support. Well, the 14 EMA was really high, which I've talked about what to do in that case. But here, so you get weakness, and then your 14 EMA is where that support setup is very, very often there, right? And you see the way that it behaves. But that's where what goes on there. I want everyone to understand automatic rally, automatic support, not just what it is, why. So the selling came in here. We understand that, right? Selling, selling, selling. This was an extreme case where you had some buying coming in and selling against it. Of course, the buyers were going the wrong way. Good for them. But it gave sellers good prices. Maybe there was some stops up there. I think that was a fake breakout. So as it came down, we got to the 14 EMA, which is a very predictable spot to create, in this case, automatic support. And what goes on there is the selling stops. So you can get a read on buyers because if buyers are going to come in, this is the beginning of where you're going to see them become active. The 14 EMA in a trend, right? So this tells these sellers what is going on with buyers. And if buying is active, they look for higher prices to sell into. The buyers are active here. In this case, we see a bit of activity, volume, and that really represents demand because again, the selling is here and they stop. And the activity that's going to go on here is going to show you buyers. If buyers show up, what does that tell these sellers? We're not marking down yet. We're likely to still get some higher prices to sell into. We want an imbalance where the selling is active and the buying is inactive. That's not the case here yet. So off of that, you get the automatic support, and you understand why now, because the selling stopped at an area that buyers are going to start to come in if they're looking to become active, and you get a read on them. If this volume was down here, like the one before it, we probably would have just dropped through and gone to the next test area. Okay. So it's an actual stopping of, again, if you're talking about a buy situation, the strength into a down move and the buying up to a 14 EMA and or certainly the 14 EMA, but sometimes you get, correlation of levels and support to resistance or whatever. And they stop their buying and they let the sellers who are going to start to get active at that point and reveal how active they are, let them reveal themselves. And that's why you can get very low volume, no supply, no demand, right? This stuff is not going to be explained to you from Trade Guider. Sorry, Eric, don't tell them. They don't tell you this stuff. I don't know if it's because they don't know it or they want you to buy the software. And I always have to say thank you for those people, because if it wasn't for them, I wouldn't know how to read a chart in the first place. It got me on track, and then I had to do my own homework for a few years, right? Okay. I had too much caffeine too quickly. Amar, I think that was your best analysis yet. All right, in 11 years, that was the best one right there. Cool, cool. I'm just kind of at a point in life where, oh, that was from 30 minutes ago. Okay. I'm so tired of bullshit. Any sort of bullshit. I have no tolerance left for anything. And having people learn my method and not be profitable, that's in the category of bullshit. So trying to fix that. Um, all right. Let me catch my breath here. Amar, you know what time it is. Eric, how did I know there's more questions and I will get back to that. I want to answer every single question. Eric says on the Euro USD, how did you trade when the market is uptrend? It's redistribution. It's a downtrend to the left. It's not well, yeah, it's redistribution, exactly. Downtrend to the left and then pulling back for a third time into an area of large supply. The building up of the short positions throughout the trend on the pullback was in that area. Fake breakouts. Hunt the stops. You know what I'm saying? So I don't look at that as an uptrend. Again, if I just zoom out, you'll see it's a downtrend with positioning for continuing the trend in this price area. Now, I would call it an uptrend if we had like, strength, huge strength, and a higher low, a higher high, right? You look at this low, you get this high, higher low, and then higher high. And if there was strength and strength, okay, sure, we're in an uptrend. But they're selling, selling, selling. And anyone who's short prematurely gets their stop hit. And anyone who's chasing these breakouts gets their stop hit. And if you're buying down here, you're really going uh, swimming against the current. I don't know how you want to call it. Buying in this situation would be very dangerous. In hindsight, you look back and go, well, there's up moves that you could have profited from. Yeah, but smart money is short. The background is bearish, and it could have just ripped through your stop at any point. Nobody has your back. not good at multitasking, so give me a second here. Sweet Chiba. It is very sweet. Fruity. What do you got, Amar? Is it fruity or is it skunky? One time I had something that was like both. It was like strawberries and skunk. Oh, somebody's just left. Freaking drug addicts. Okay, I'll answer some more questions. Where else? Let me scroll up. Nobody type for one moment, please. Oh my gosh, I'm going really far. Okay. AR was the last one. All right, okay. Okay, so explain AR. That was the last one. Amar, I think it's the best. Okay, we already did that. Dean, you bought a number of mopeds with your profit. When you go out with your moped gang, terrorize old ladies. And I know people asking about the scalp, and I know people talking about cryptos, and we're getting there. We're getting there. You know what else too? I'll just put this out there for anyone who we'll look at crypto stuff today. I'll answer some questions if you have. I'm also trading that. I was on the verge of a new high on my account before I took a nap, so maybe we're there right now. I don't know. But I bought on that last dip, as I told you guys. But for those who are, hold on, don't type for a second. It's making the chat jump for me. Who are interested in cryptos, you know what you could do is, I do a class on Sunday, so you're free to attend a class, and we could spend a good 30 minutes to an hour just on the cryptos. If you want to do that, just message me on a Saturday or whatever on a Sunday before 9:30 p.m. New York time. I do it Sunday night, which is when people tend to be home and relaxed. And really, with cryptos, we check in once a week and we talk about our plan. So if anyone wants to join those, you could just email me on a Sunday and say, hey, Pete, let me join the crypto class. And you can join one for free. And that'll be all about that, the whole thing. But the class is for people who bought the course. But of course, you can pop in and see what's going on. Now, finding my next question. Okay, mopeds. Oh, somebody just typed again. Okay, wait, stop typing. Do me a favor, guys, just for a second. Because whenever somebody types, it jumps to the recent thing, and I'm trying to go scroll back and read the older questions so I can get caught up. So one second, don't type. It's really annoying that it does that. It's not your fault. Okay, no typing, no typing. Okay, if the entries are later in the day, are you holding the positions overnight or over weekends? Okay, good. First of all, by the time we get to really U.S. closing in those few hours that happen before Asia open, typically I want to be. Typically I'm out of the trade by that point, unless there's a stop loss at break even kind of situation, and maybe trail it. So it's day trading. I'm not looking to hold things for multiple days normally, unless again my stop is at break even and it's just running off and I'm trailing it. But I would certainly not let anything that's in profit by the end of the day, considering U.S. session the day, to run back and turn into a loss or anything like that. And I also would not just leave it completely there where I'd take no profit at all at the end of the day and say, okay, I'm just moving my stop to break even and just leave it. I will take some profit because of that time of day. Now, depending on if let's say I'm short, how much demand I see and how the trade is playing out. And I get information and then I do analysis as it's playing out to tell me how it's going, what to expect. So I manage it according to that. Same information we use to read a chart, I'll use to manage a trade. Um, so if you're short moving down, you have areas that are going to tell you about demand, support, fibs, things like that. I do low ground, especially. So I kind of play both sides where I certainly want to have some banked if it's, going on 5, 6 p.m. New York time, whatever. And then uh, based on how it looks and how much demand is coming in, if I'm short, let's say, that dictates how much I want to close. Maybe I want to close most of it if I see large demand and lock in some pips, right? So it's that sort of thing. Um, Now, as far as the weekend, pretty much never. No. There's a lot of profit taking on Fridays. The charts show it. And again, I follow what the big money is doing. So let's say you're in like, for example, now we're in a bearish environment. Mark my words, there's probably a 85% chance that late Friday or into New York session Friday, tomorrow, you're going to get some large demand. That's them getting out. So if they're not holding over the weekend, neither am I. And the last thing I want to see is some big gap, and I don't know what the heck. Think about that shit over the weekend. Nah. Okay, very good. I'm getting caught up. I'm at 30 minutes ago still. Dwight, very welcome. What your key insights into being efficient? Time of day, what's worth devoting, wait time for being efficient is as far as spending time on the charts. If I really wanted to narrow it down, based on, again, this tends to change over time. Right now, we're in extreme environment where U.S. session is where the setups are happening. So if you're starting your analysis maybe just before, so you're prepared, and you get that big news, typically like 8:30, 9:30, New York time, and those news moves again. In other conditions where there tends to be earlier setups, those news moves could get you to your target and then just become a mess or whatever. Now it's getting you to your entry very often. So getting on the charts for U.S. session at that time of day, or the West, is probably the most efficient at this point in time. But you may get down the line to a point where you see that the first few hours of London open in that time gave setups that you missed. And if you start to see that, you should adjust back. There's definitely phases that the market goes through with those things. And again, now we're at that extreme late in the day phase. How do you consider low volume versus high level? Are you based on, say, the mid range of the volume, like it's above the mid as high level? Just remember that the volume is showing the amount of activity. And if you look at the candles, it can tell you what that activity represents. So it's relative to the recent range. It's relative to the left. That's all. So does that help? Sometimes I'll see, on occasion, let's say I see something on a 5 minute, I'll have to really zoom out and get an idea, like, is this really high volume? Where are we, right? So, for example, I'll give you some hypotheticals. If I'm buying, I need to see volume. Let's say I'm buying because we're very bearish. There's a lot of short positions. And let's say I was looking to buy here. How much volume would I need to go against that background and have it change? Probably like this much. Higher than this stuff. If you're looking for this every time, you're not going to get that much. That's a little more rare, but that's huge weakness and a weakness. But the higher the better. If you're talking about, let's say, a reversal situation, there's no indicator, there's no average, there's no way of knowing. It's a matter of just looking at the amount of activity and knowing what that represents. And if I look over my left, high volume, that represents weakness. This was kind of a quiet day at lower prices. Here we have an increase, it's weakness. Here we have an increase, it's weakness. That's all I need to know. I'm not worried about an average, a thermometer, any of that stuff. You know what I'm saying? Just what else do you need to know? But what these three are saying to the left is the majority of the action back there, and it's all telling you one direction, and it's all predictable price areas on fake breakouts. Is it high volume? Yeah. At the time, was this high volume? Yeah. It's slightly higher than the last couple of days, or just slightly higher than that, or that's here. And then this one, that's higher than anything that happened on the previous day. Just remember, it's millions of participants all over the world, and they're going to create fluctuations in activity, but the big stuff is going to show high activity. And so you just read it and understand, take in the information. There's no trick to it. There's no colored volume indicator that's going to help you. There's no moving average that you can throw on there that's going to help you. There's no formula that's going to say ding, 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 this is high volume, ding, ding, this is low volume. Just read the situation. That's the best I could say. Understand what the participants are doing and not doing, and what the big money is doing and not doing, and piece together the story. It's not about a particular exact thing with the volume. It's all just relative to what's going on, relative to the moment. You can have a very quiet day and a pop in volume and say, okay, that looks like high volume. And then as soon as you zoom out, you realize it's just a really quiet day and it's not even high volume compared to what normally goes on during a day, right? So it's just relative to the recent activity, which may have you think, well, then throw on a moving average, but it doesn't do you any good. All right, we're just blowing through the questions, sort of, very slowly. James, what are your thoughts on Renko as time doesn't matter? Never did anything for me. No. It's taking the pure, organic, real information and just turning it into something that doesn't do me any good. I just need to see price, time, and volume. I don't need anything more or anything less. Nobody needs anything more or anything less to understand what's going on in the market, to understand what people are talking about right now. Renko, nothing else is going to tell you this. Price, time, and volume are going to tell you word for word what they are saying, those who have the big money. That's all you need. What are they saying right now? We're sitting on these short positions. If there's still buyers, we're going to continue to sell into higher prices. That's the plan. This is literally being talked about right now with those who have a lot of money. And I know this from the chart. Forget anything else. Understand what I'm saying? Okay. Tough love today. Ryan. Hi, Pete. Really enjoyed all your videos on YouTube. Good. Yeah, for you guys, if you haven't bought the course, you can watch a ton of YouTube videos. Just curious if, let's say, we are short EU and GU at the same time, won't we overall be long USD? Yes, you would. And plus the individual action that goes on with euro and pound. But like I say, the majority of the time, the US dollar and the yen are driving things. So yes, like a double exposure, correct. Would you rather short EU and EJ just to limit your, well, then I'd be, okay, I understand what you're saying. Now, when I first enter a trade, and if I'm expecting that I may get another trade somewhere else later in the day, number one, then I go in with limited risk. Number two, if I'm going short euro dollar and pound dollar like I did yesterday, I am fully aware that I'm depending on one thing for those two trades, the US dollar being strong. Unless I get really lucky and the euro gets weak or the pound gets weak and drops. But like I said, the majority of the time, if I'm short euro dollar, short pound in this example yesterday, of course, both trades are dependent on US dollar strength. Therefore, my risk is like the equivalent of one trade. I don't like go some big risk because there's two opportunities. It's a way of kind of spreading out your positions based on one cause. And really it should be, if you have two trades that are based on the same cause, you're kind of treating it like one trade. You're just kind of spreading it around because it's valid. One may look good and then the other one confirms a little later and you went limited risk, so now you can take the second one, right? So absolutely, I get where you're coming from, and it is based on the same cause. They're going to likely, if I going short euro dollar and pound dollar yesterday, there was probably a 95% chance of them having the same outcome. So it is like one trade, yes. Now, if you're asking about, okay, and you corrected yourself, so let me see. Would you rather short EU and pound yen? I see what you're saying, because those are completely different. Well, if the yen, again, the yen and the US dollar very often correlate, so that's still likely to be similar. But that's a case if I'm talking about, trading a euro dollar and a pound yen. So you're away from, you have the US dollar on one, you have the yen on the other, and then of course the euro and the pound are different. So, you could have a situation there where you go short on one and long on the other. Yep. It's not a matter of rather, it's whatever the chart says and keep my risk right. And if we're looking at um, in that case, when you say short euro dollar, oh, we just jumped. The price is heavily trending. Does it automatically? Is this the same person? Wait. Oh gosh, I'm all over the place now. Scrolling back. Sorry. Okay, so that was Ryan. Now, does that answer your question? So if the last thing, hold on, guys, don't type. Um, the last thing you said was short EU and pound yen, and that would be dependent on if that situation was going on where I shorted the euro dollar and let's say short or buying the pound yen. Which one are you asking? But in that case, then the yen has its own situation. The U.S. dollar has its own situation. They may not be the same. You can have a very strong uptrend where the U.S. dollar is strong and the yen is weak, and therefore there's a short and a long versus them. Right? It's all about understanding what's driving the market. Hopefully that answers your question. All right, Chad Hoodie, price area not time frame. We're getting there. Matt, got to run. Your content is super valuable. May first week of profit in a while after USC short yesterday. Okay, very good. He left already, I think. Super appreciated you invite me to this show. Okay, very good. Marcus says, I am short. I trade Asia. Oh, that was from before. Oh, okay. Next. Sometimes. Thanks. Okay, good. Hopefully, Marcus, we cleared some things up. At least what I'm doing and what works for me. Jim. I never finished what I was doing here, MR. Jim. Hey, Pete, if you entered short yesterday after the Fed speech, can you go over when you got in and your thinking? Yes. And before I even get to that, just discussing news volatility. If there's a clear situation going on leading up to news, I do not fear news. I look forward to it. Because unless the chart is in a state of uncertainty, um, the news is either going to help get you to where you want to get into a trade or help your trade get to your target. So news is not something to be feared. News is now it is when the chart is a mess. Let's say, for example, what's a bad situation on news would be, okay, we're bearish now, we have weakness to the left, and let's say that throughout today, hypothetically, leading up to some high impact news in US session, we keep seeing demand coming in. Bearish environment, but we're seeing demand. Okay, so they're getting out of these shorts, they're kind of covering their ass beforehand. Right. Now let's say again, a very common scenario where bearish and price is moving up and shoots up on news in a bearish environment where smart money is short and has been holding on to those shorts all day leading up to news. And then price pops up on news. What do you think is going to happen? It hits the stops. People start chasing it long, and that's all good. That's just going to add to the profit that smart money makes off of it because they get to sell higher in larger amounts. So if price is clean leading up to news, it's all fine. It's just imagine things just speeding up and getting faster. And as far as yes, the entries, And again, today is cool that, we're really just being patient for those higher prices than the good setups coming U.S. session. So we just get to chill out and look here. So yesterday, no reason to fear news. So bearish in the background, and we literally had drawn this spot to look for the short. So, well, it's news. What a surprise, that these things are happening. So then, again, to go through the process in real time. So the weakness comes in, higher prices, predetermined area we had marked, gets squashed, you get the high volume, you get the result. So that confirms weakness. That's your very first initial sort of automatic support. After you see this moving up, you say, okay, there's some support there. Now trying to get through that, that's an issue where it did not get through on, whoa, did not get through on trying to get this flat because we want weakness, high volume weakness up here, which we have, but then getting through here on no demand, seeing lower prices, show lack of buyers, right? And that occurred here. And also, what do I say about automatic support? So in real time, I mentioned this earlier already today. This is how I do it. In real time, if you fail to break the automatic support, which is this is a failure, right? Then you update it to that point. Now going forward, you got to get through that. Well, this one failed, so let's put it there. And then finally, yes. And this is closing at or near the low. As I described, the ideal push through automatic support, automatic rally. In this case, support at or near the low. And volume, the lower the better. That's exactly how it's explained in the course, and that's the way I've always done it. So that's an entry. If you're a little uncertain, you still get this low volume into low prices closing at the low stuff here. So you get a couple opportunities in here for sure. So now you're seeing here's your supply and your news madness. But your supply is certainly there. It's all marked in advance. So you know that you're just looking for the imbalance. High volume here, low volume as you're moving down. Now, normally you get a 14 EMA test, but in this case, the 14 EMA is up in this area, right? You got to get away from there to really test. So that wasn't relevant. But we had our automatic support and then eventually getting through that properly for the entry. So there's that. And of course, if you missed it, there's also this stuff saying, get in already, right? Okay, so there's that. And then the pound is going to be very similar. So very quickly, again, it's US dollar driven, and that's why it's similar. So this is off the high price. That's the highest volume of the session besides that guy. And that's also weakness. So there's weakness, right? The two highest volume points. So there, again, this is an area we had marked in advance. So that certainly came in perfectly. And then now in this case, you notice the 14 EMA is not up here like we just saw. It actually has to move down away from the weakness to test. So initially on the test, okay, a bit too much volume. You don't want to enter there, but you do get your automatic support, or at least at that point in time is there. Initially it was here. So let's just kind of go through it in real time. There's some support setting up and there's your push through. Too much volume. Okay, next, update it. I can't draw a straight line. Save my life. Now, when can we see lower prices on lower volume? Let me zoom in again. And again, these entries are based on understanding what's going on rather than, paint by numbers, trade by numbers. So not everybody's going to get in at exactly the same time, but it's going to be similar and based on the same reasoning. Some might be a little more aggressive than others. I could see this slightly going below, taking that, right? And seeing generally these lower prices here accepted on lower volume as an entry. Where else? Then these lower prices did show some. So it's a matter of seeing lower prices not having an issue. So you could, again, at this point, but it's not great. And then once you get through here, you actually probably see some lower stuff, but this is kind of late. Now, the thing is, the situation from a 1 hour point of view and selling at this point was very, very good. And the weakness was very good and all that. Sometimes I'm in a situation where where the 5 minute has to be really perfect to convince me to get into a trade. But then other times you have really good backgrounds where it's just like, all right, let's see the weakness and let's see no issue really with demand coming in. Anyway, I got it somewhere at this point. I can check my platform, tell you exact time. Somebody told me, what else did they take? Somebody told me they took the pound yen yesterday. It probably looks very similar. Well, yeah, pound yen is pretty good. Yeah, yeah, yeah. All right. Wow, there's even more people in here than before. All right, give me 1 minute. I will return. I'll answer your questions. Again, if you're joining today for the freebie, welcome. You could type your questions. Today is all about looking for the up moves and weakness, just like yesterday and the day before. Probably U.S. session. Okay, I'll be back in 1 minute. All right. Cheers, Amar, and anyone else involved in the cannabis. What else? I got so many questions here. Oh my gosh. I offered to help because I'm not trying to virtue signal or anything. I'm just came to the realization that I could really be doing more. And man, the response is just insane. Hopefully, one day when I die, you'll have some black and white picture of me. You'll use my middle name. It'll be Richard DeMille Wyckoff. Uh, all right, I'm getting caught up. Renko, double exposure. Where am I? Hoodie. I can't move on. Okay, good. Mark. Okay, good. Yeah, we talked about news entry yesterday. Okay, Mr. Chad, could you go over your basic rules for position management? I'm still getting out of trades too early. Sure. How about this? I'll give you the short answer. If you have questions, then we'll get into more. But I think you know enough for me to give you the short answer, and you'll know when to move to break even, trailing the stop, taking profits. Yeah, you know what? I'll lay it out on the chart. Yeah, the Doobie Brothers are kicking in right now. Entered you short yesterday, went down, close partial, so you went back up maybe and plunged down again. Rick, yes. Well, if you were listening to the chart by doing that, based on your best informed decision, then no regrets. No regrets. Listen to the chart. If I see a move, I'm in it 20 pips in, I see a serious issue and I close the trade, which is more rare but does happen, and then it moves 50 pips without me, I have no emotional response. If I do, I need to work on myself and appreciating things. Okay, moving on. Let's talk about profit taking. Yeah, so you'll want to mark up areas. Let's do a hypothetical short from here, right? Let's do that. Hypothetical short from there. So let's say I went short here. What am I going to do? Mark up the chart and your analysis that you use for going long is going to tell you about buyers and where to look for them. So let's say you're shorting here. Mark the fib area. First thing. Mark any obvious support resistance levels, right? Whatever it is. Okay. Certainly the fib and some levels. Okay. So as we get through here, we're going to find out about buyers. Now let's say we took a short here, right? It's very possible today. So from there, you look at this area that's going to tell you about buyers. Now, if it's under 20 pips, if we're talking about a really small move before we get to one of these areas, it's not a target area. It's just area of information that's going to tell you how your trade is going. And if there's any serious problems, you'll find out. Right? But let's say hypothetically we enter at, let's round it off to 40, and then we're down in the fib area, and we're getting to about 20 pips here, which is my minimum to even think about doing any sort of partial closing. I'm not taking partial profit at 12 pips and stuff. You killed your risk reward. The risk rewards are built into the setups, the reward. So, but it's an area, right? So, based on this first thing, that's going to tell me what's going on. So, if I see large strength, right? Maybe I'll close half and move up my stop. If I see on the other side of it, very little demand coming in, no real increase in volume through here, not going to do anything. I'll watch it and know that we're very, very likely getting here before we find demand, right? Simple support, fibs, our usual tools. And now at this point, it's likely the end of the day. It's likely late. And I'd like to take some profit either way. And when we're talking about retracement trades, going back to the low, we're talking about shorting, is really the end of the day. If we can get there, we're good, kind of main target, right? So at this point, I close partial position no matter what. This was optional. This was, let's see how it's going. If there's any issues, we'll find out. This is, I'm going to take profit no matter what, to some extent. Maybe not the whole thing. That's based on how much demand is coming in, what time it is, and all that. But if I don't see demand coming in here, there's no reason to close the whole trade. I can close half, I can close 3/4, whatever it is, and put my stop at a break even. And maybe do a fake breakout, show me that huge demand, right? We know that scenario. And from there, oh, there's the big demand. Move my stop down here. So if the fake breakout confirms, I get out. If it does break test, I stay in. Right? Now we're into new low ground. You can use the 14 EMA because strong trends bounce off of that to keep your distance on your trail. And keep an eye on possible demand coming in. Now, this is a very typical scenario. So you have your first fib kind of thing, smaller pip count, not really a target. See what's going on. Main target by the end of the day. Definitely take some profit, stop at break even, see how it reacts, and see how much you might expect something further. Keep an eye on demand down there. Does that help? That's pretty much the routine. Yesterday you can apply the same thing. If you're getting short here, you draw a fib from this low to high. It tells you about demand. If it doesn't show up, you're likely getting there, right? Take some profit there. It's getting late in the day, right? Stop at break even. No huge issue with demand. Try to ride it out, right? Okay, yeah. Yeah, write it down. Sure. It's basically three things you want to look at. The initial information areas and potential problematic areas, or if it's big enough, potential first target areas. But it really tells you about how that trade is going. And then your main target, and then your extension. Yeah. And main target, always, I'm going to put some in the bank. Just even if there's no demand showing up there, no huge demand, I just know probability wise, it's probably going to stop there and slow down and maybe get a bounce because it's a major support or something. All right, good. So you map out these areas, and I think there was another question about targets. So again, this should really help everybody. When you get into a trade, you map out your targets and you have a plan. Therefore, you can never look back and go, I made a mistake. I got out too early, or I should have done this or should have done that. Because A, you have a plan that's logical based on when you might see those buyers. And you're listening to the chart when it gets to these areas, or at some random area. If you're short and you see huge demand suddenly, any anomalous thing could happen. And what you do is you listen to the chart. So therefore, looking back, whatever happened happened. It doesn't matter. Like I said, if you get 20 pips up and you see a huge issue with the trade and you close it and it moved without you the rest of the day, that's fine. If and vice versa, you can get to a point where you're not seeing demand coming in while you're short and you're holding and holding, holding. That's my point. Okay, good. So next question. You guys are making me work. Okay, we're gonna have to stop the questions because meanwhile, normally we're looking at charts during these times, but like I said, we want to get higher for these shorts generally is this situation here overall. And if price is moving up, and we're on track. And what do you know? We're moved up a little bit. So it's not running off without us. And if it does, it does, right? Smart money's already short from up higher. So what are you going to do? Nothing right here. All right. Are all your setups fake breaks? No, they are not. Nope. It's just very common. Could be a simple up move to a 50 fib weakness. You get in. But it does happen a lot. They're not all fake breaks. They're not all fib. It's just those two things are very common. The cleanest, most high probability setups tend to be fake breakouts in there somewhere, whether it's a 1 hour pattern or a 5 minute. Because a fake breakout, let's say you move up once, you see weakness, but if you move up again to that area or even slightly higher and you see weakness again, that tells you really there's building up of short positions in that area. One time could be a blip, it could be a profit taking, it could be there was supply in that price area, it got sucked into the market and now it's gone. But if you revisit that area and you see supply again, and you get your double top fake breaks, double bottom fake break, then you know there's a building up of positions in that area. So it makes it a much better trade, right? Okay, so trade management. Rick, okay, good. Yeah, so we answered about the management of trades that a couple of people asked. AR explanation, great. Thanks to explain the missing piece. We sellers will now stop to give you buyers a chance. What you got? Exactly, Mr. DB. Exactly. And that's why If you're talking about a weakness and a test for demand, that's why you get no demand. That's why we can call that demand. That's why you suddenly get low volume, right? In a good scenario. Okay. David Foxhall, how are you? I'm doing well. Thanks. Short seems to be easier than going long, at least for me. Well, you can turn your screen upside down when you have long setups, and then you'll feel better. Would you go long on Ethereum USD? Oh yeah, cryptos. When price is heavily trending, does it automatically mean there's imbalance between buyers and sellers in the background? No. Sometimes you can have an unclear background and then a trend forms, and that just means uh, the imbalance showed up and things figured themselves out. To answer the question, not everything is always planned. But if it's not planned, it's not really something I want to be a part of. So if there's an uptrend without strength in the background, I don't think, well, I should be in it. There's really no way to know. If they didn't know, how was I supposed to know, right? There wasn't anything to know. But then once it developed, then I'm looking for strength to get in, right? Okay, good. Oil, yeah, I guess. I don't know what's up with oil. It's negative, right? I don't know. It's either buy and you'll make a lot of money eventually, or we're done with oil in the world and the Great Reset has begun, and Tesla's going to come out with the answer to everything, and we won't need oil. All right. So it's one or the other. I don't know. We can look at it eventually, I guess. I know I have to get to the cryptos too, and it's getting late. James, EU trade took when the volume be too high off the automatic rally or automatic support in that case, suggesting too many buyers. Well, initially, yes. And then it was able to get through the area on lower volume, right? So it doesn't have to be right the first time. The thing is, there could be a bit of demand in that price area. It's all about price areas that could then dry up, and then bam, you have your imbalance, right? So, and we're dealing with news stuff too, so volume's going to be high. But then we finally to see lower prices and get through whatever you had marked up as a support, which is obviously here at that point or whatever, and then again going through real time. Okay, so you get a support here. That's the entry. If you don't enter there, you still get that closing at or near the low. Lower better, the lower the better on volume. So you do have a couple opportunities right there, totally confirmed. Dwight, very good. See you soon. DB follow-up question. Efficiency. Do you walk away from your screen if you hit your daily pip target? I don't have a daily pip target. I have whatever the chart wants to give is what I'll take. Or do you hunt for more pips? No, it's not about that at all. It's not a vending machine. It's whatever the chart offers is what I'm looking to take advantage of. So one week I can make 20 pips, and the next week I can make 150 pips, and that's because if you look at the chart, that's really all it offered. That's what it offered. So I make no demands, no pun intended, really at all. I don't put demands on the chart. I don't have a target. How arrogant of me it, would it be to say I need a certain amount out of this market, which I have absolutely no control over? It's whatever it offers. I was like, thank you. The idea of a daily target for anybody is absolute nonsense, as if you have that much control. Pete, how do you enter orders on MT4? I don't trade on MT4. I just use the charting because it's so easy and quick and no lag and no silliness. Would you have many entries to scale out? But anyway, I like to use typically the platform that brokers offer. It seems to be a little bit tighter, a little bit better. I've had issues with MT4 and the disconnecting, and I just like it for charting. And plus I can get a demo of whatever broker I want to see the volume of. And then, of course, trade on my actual thing, which is a different broker. I'm not even with FXCM. Okay, I know this stuff I didn't get to today. Probably keen on more of the scalp strategy with crypto than the crypto review itself, e.g. how it applies as the strategy is 2-3 years old. Do just need to confirm my understanding of the course. Okay, well, if we want to talk about scalping cryptos for a moment before I go, which I had been doing for a while, and now I've gone to the more swing trading approach, scaling in and out, and the day trading and the short-term stuff I'm doing in the forex, and I like keeping it that way. But and also I was doing that before there was any fee whatsoever if you entered on a limit order, and now there is a fee, which is still fine. It's like a spread, but I don't think you can find a no fee the way there used to be with cryptos like a year ago and before that. Whoa, we're at 9.6. Bam. So I just hit a new high in my portfolio value on cryptos, uh, dating back to when the sort of resetting after the crash in March. We had come off a nice uptrend. I thinned out my position. We dropped. I waited, and then mid March I started to buy again, and so on and so on. So from that point, and if you're following the charts and following my method, and if you have the crypto course, you're likely seeing a new high watermark, a new high in your portfolio balance right now. Bam. Yeah, sorry, point. I know that I'm getting bombarded, but I wanted to do it. Hold on. So let me. Now, if Bitcoin can do maybe a fake break of 10 and see a lot of weakness there, then I'll grab some profit. But let's get to the. Let me bring up that chart before I go. Let's do that. This guy's been waiting. I'm sorry. Okay. Trading view. Oh, nice, nice. Come on, for those who bought the course and have been trading the cryptos, please tell everybody how easy and profitable this is. Don't take it from me. Here's the chart. Here's the chart. Let me switch over. Okay. Now, one of the main things I was doing with the cryptos when I was scalping it, which I'm not doing now, but you can. Oh, I don't have my 14 EMA on here. Okay, we could pretty much imagine it's right through there. I know where that thing is going to be. So in uptrends, you can apply the same thing. In uptrends that are, because here we have a range, and now we start trending upward. So in uptrends is probably your 14 EMA right there and right there, right? Where you're not seeing weakness, you have that situation. Now you're seeing some weakness, so perhaps not on the next one. But when higher prices come in, right, and you get so there's nothing wrong with applying that here. Also, what I like is, let's say you have a support area, just using what's on the chart right now, and there was a good amount of buy volume here, good amount of strength on a fake breakout. So this is showing some accumulation through this area. And when I was scalping, what I would do is, especially when there was no fee for a limit order, so I set it right before the support, or even see the fake breakout get me in. And if there's a bit of accumulation in a range, just looking to buy the bottom and sell the top. Not all this, because we're talking about scalping, and this could go on for a long time. But if you're seeing a range where there is a spike in buying at any point off of that low and looking to get in, and if it breaks out, you're out. And so it's a scalp. But if it does, just a little fake break and gets to the top area of the range again, then there's your scalp. You also have low volume breakouts. Low volume breakouts, which is like a push through kind of explanation. Where here, if you didn't take advantage, let's say, of strength and you're moving up, right? We're testing for sellers here, and we're seeing lack of any sell area here, and it's low volume. Let's say breaking a previous level or whatever. At this point, you got some high volume, but you get the idea. So low volume into higher prices off strength, or low volume leading to a breakout of a situation, breakout of a range, is likely going to move for you as well. But also this indicator I had customized. So if you want to kind of see what it is, this comes with your platform with TradingView, but I changed it. I changed the colors, the input, and it pretty well represents buying and selling with the green and red. But, I don't depend on it. It's the same thing. I mean, we know that's weakness, and we know that's strength. But any particular question? Wait, let me see. Is your scalp course only works for forex or also crypto market? It works for any market that moves well. And the best thing to do is to look at the chart. It's based on those things that I just said. So if you're seeing 5-minute strong trends that are bouncing off the 14 EMA in a few waves, any market that moves well is likely going to be doing this. Low volume breakouts, fake breakouts with strength that are likely going to move up, even if you don't end up completely into an uptrend. You have a situation like this where you have strength and a fake breakout in strength, and you're likely going to move up. You can see selling there and get out. Call that a scalp. So if you notice here, the charts are pretty clear. The main difference between, really the only difference, or the main difference between cryptos and the forex is that is very often, and this is, I adjust my trading to this, but it doesn't really matter with scalping, is that you'll see from an overview, 1 hour point of view, let's say, very large strength or very large weakness, and it doesn't necessarily mean a reversal. So that's one of the main things you're going to experience with this. So for example, we could just look recently, because we know we moved up out of this meltdown situation, which happened there. Whoa, what the heck? Just my price. I didn't know you could do that. How annoying. Would ever want to do that? Anyway, let me go to a 4-hour chart, because that's my home base here on cryptos, 4-hour chart. And I was just going to show one of the main differences between the cryptos and other markets, and how I take advantage of that, and why I trade slightly differently and more of swing trading. So here was it's the end of the world, it's a pandemic, right? Okay. Now, as we're moving up, now there was a lot of buying there, and that's not, I don't want to discuss all that, but I started buying around this point after it stabilized and gave a fib retracement and confirmed buying. Okay. But moving up, I just wanted to point out some of the differences. You can see weakness, let's say here, this is the highest volume in a while. Now, normally in the forex world, if you see this, you're probably looking to go short. You see this in real time, right? We have a resistance, a fake break, and weakness. If you see that in real time, we're likely looking to go short, right? We all know that. Not in cryptos. So I'm less into making these longer term predictions. The small time frames, as we just saw, are pretty dependable. But once you get into this bigger stuff, again here, right? So in real time, when you see this weakness coming in, high volume, right, into new ground, right, confirming weakness. Normally in any market, you're looking to go short here, right? So that's the thing here, and that's why I'm not approaching it in the same way as the forex, right? And what does that mean? What are they doing? It means they're taking advantage of higher prices to sell off in fractions, in percentages, and they're taking advantage of lower prices to buy in percentages. They're building and selling off in pieces, right? They're price cost averaging, whatever you want to call it. So you're buying low, you're selling high, you're working your way in out. It's a portfolio based thing. or you're holding maybe different amounts of different things because of the way the charts are dictating that you should be doing. But I'm always ready for higher and lower prices. When I see profit taking, in this case on longs, I do mimic that and also combine it with my own plan, so maybe I can outsmart them sometimes and do better. But these three areas of weakness, I sold off in fractions what I had bought throughout this area. The 6.5 up to 7, whatever it was after the meltdown when I started buying. I listened to the chart and sold off some there, sold off some there. I never sell all of it, sold off some there. Then after this stabilized, I bought some here. This brings me to a new high in my account now, just because we did this, and I bought again. And going forward, this might stop here, do a fake breakout. I expect some large selling here. I'd likely be selling some off soon, but never all of it. Even if I see a ton of weakness, then I'll sell off more, but never all of it, right? Okay, and there's a correlation among them. And other rules to my whole approach to trading cryptos, which I can't get into now, it's too much. But I do have the course, and if you have the forex course, you get a big discount on that, and an even bigger discount if you're in the live sessions. So if anyone's interested in that, and then we do the classes on Sunday. And if you want to pop in one class and no charge on Sunday, you can do that. Let me know. Okay, I think we're done. Before I lose my voice, any Mr. Poi, any last questions on that? I wanted to make sure because I know you've been waiting. All right, guys. Very good. Very good. Very good. Last thing I'll say is, again, I'm just really at the point where I want to make sure that everybody that has bought my course and spent any money learning this stuff, and time is money, that you're doing well, you're doing it right, and to kind of almost get there and just leave it and say, well, this, again, the market's been, I don't know if it's me or the market or it's both, but this year has been ridiculous, the win ratio. So someone who's not as experienced as me should still be profitable to some extent. And if you're not making profit, and this year hasn't been profitable, last year too, and since you really started doing it, then things have to be corrected. So I will help out today. Hopefully that was a lot of good stuff. Maybe I'll just post this video on YouTube. So again, if you spent money, if you spent time learning my stuff, I'm here, making sure you're getting it. If you email me next week, it's still not happening, I still have questions, and then I'll invite you back. Okay. I just jammed in 500,000 words in an hour and a half. Ooh, breathe. Again, this is my motivation at this point in life. All right, guys. Very good having you. Thanks for the good questions. I'll see some of you on Sunday at the crypto class. We know what we're looking for today. We went through that thoroughly. Looks like we may be getting there. Patience. The setups have been later. But we're looking for the up moves and the weakness. My guess, we probably move up, get the weakness, drop down, maybe get into some new lows, and then they start covering and getting out. You see some demand into late today or tomorrow or whatever. But if anything is going to change, it's going to show up on high volume because they are short big time right now. So we want to stay with that direction. Very welcome. All right, guys, it's been fun. Oh, one last question. Yes, go ahead. A couple other questions. Do I trade gold? No. You could. So with the methodology of crypto, can I find that in the FX course or will be? Okay. The thing is this is why I give a big discount if somebody buys the FX course, because some of the material does repeat. So if you bought the FX course, otherwise known as just the main course, then all the information you learn there is going to help you in the cryptos, and some of that is going to repeat. You know, how to read volume and the fake breakouts and the fibs, right? But there's also there some differences. So that's the answer. So if you do the FX course, you'll have all, of course, like 13 hours of information to teach you about trading FX, but it's not the same as the crypto. But again, a lot of it does carry over because markets are markets. So I give a discount if you bought the FX course and you buy the crypto course. Okay, so it's up to you what you want to do. I mean, if you want to get them both, I'll give you a deal. Whatever whatever you decide. Cool, cool. All right, very welcome, very welcome. It's been fun. I'll probably post this on YouTube. Maybe I'll listen back and make sure I didn't say anything too stupid. There, Demon. I already did that. All right, guys. That reverse up thrust could lead to climactic action, so you might have to do what you gotta do. All right, guys. Have a good one. See you soon.